What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the upcoming SoFi earnings. There's a little bit of changes that SoFi has made for this earnings compared to their previous earnings. On this channel, guys, I think I've been covering the last 6 earnings or so. We're talking 18 months of coverage. As soon as we get close to these earnings, I start to do, more videos, coverage of the updates and stuff like that. So be sure to smash the like button, drop a comment, any questions that you guys have heading into these earnings. I'm going to be answering all of your questions. And be sure to subscribe to the channel. Let's try and get the channel past 15,000 subscribers. I'm most likely going to start doing some more YouTube videos in the future, especially when the Fed, stops all of their rate hikes. So that could be coming in the next, 1 or 2 months. So I think good things are on the horizon. We had a 37, 38% correction on the NASDAQ. Some company earnings that we've had, this past week were pretty bad, but some, once again, were pretty solid. And that's, the truth, okay? The media likes to put it that every single company is going to be having horrific earnings, but, 20, 30% of them do shine during earnings. And I believe we're going to have a solid earnings report with SoFi Tuesday pre-market. I just think SoFi is going to have a solid earnings because they have so much control, through their, digital marketing and stuff, able to track, trends that are happening. If student loans are shot and mortgages are shot, they take their foot off the gas. They put their money to other places such as Galileo, personal loans, financial services. And I just believe, because they have so much, data and information on their customers, that they're able to, beat earnings every single quarter because they know where to put their, marketing dollars and, what type of, product to really start hammering down, the last couple of weeks of earnings. So we're going to get covering it. Once again, be sure to subscribe to the channel if you enjoy this video. Let's get into it. All right, guys, just like that, boom, the freaking mega caps are now done. I mean, that literally happened in a blink of an eye. It looks like Facebook, was the one that got hammered the most. Microsoft decent, Apple decent, and then Amazon wasn't that good as well. So, like I said, some companies perform good, some not as good, some pretty solid. It's just everything is grouped into a basket in the media, recession, America's ending and stuff like that. But as you can see, some earnings aren't as bad. So look at what we got coming up Monday. Pretty boring day on Monday. And then Tuesday, Wednesday, Thursday, we start to get more into the technology fintech sector. Usually SoFi has done their earnings with some other fintechs. And look at this, guys. This earnings, they're not with any other, technology companies. I've seen them report with PayPal and other companies, but it looks like they're alone on this one. Robinhood's the next day. PayPal and Coinbase are the next day. So it's just pretty much SoFi, AMD, Airbnb. So there's going to be all eyes on SoFi pre-market, and this is the first earnings report that they've done pre-market. I don't know exactly why they have decided to switch. Maybe they want less market manipulation in their stock, and investors to get squeezed first thing in the morning if they do have a good earnings. SoFi also moved their earnings up 10 days, so this could be a very interesting week, guys. So literally one more business day and our earnings are heading our way, pre-market. We're always getting questions about the outstanding shares, guys. You can see as of their last report, shares outstanding were 910 million. So we're going to be using that today, for some of the calculations on what type of, losses and stuff they can be seeing. You can see they lost 95 million last quarter, which came right around like 12 cent loss and stuff like that. So we're going to be, going into what type of guidance they have for this quarter. And you have to go on Yahoo Finance, guys. You can see they got 10 analysts covering the stock. The average estimate right now is about a negative 10-cent loss, so a little bit better than last quarter. A low estimate, which is, a worst case scenario, negative 13 cents. And then the high estimate would be negative 9 cents. So this is going to be a, decline from last year, but I don't believe they had a lot of the stock-based compensation like that. They may have had some other benefits on their earnings, but You don't really got to worry about the last year EPS, even though it's something to look at. But we're going to be looking out for a 10-cent loss. That's what we want to see. And as you can see, when you draw it up, negative 10 cents right here with the 912 million outstanding shares. The loss is going to come around $87 million loss. We'll take a look at SoFi's earnings from the past 2 quarters and see the difference for this 87 million projected 10-cent EPS loss. So you can see here for Q1, they had a revenue of 317, a net loss of 110. This is about 14-cent loss. And then the second quarter, 350 million, and then they had a net loss of 95 million, about 12 cents. So a good way to think about this is right now, guys, with their outstanding shares, every 2 cents a better EPS is calculated right around $15 million. Okay, so we should be dropping right around the $80 million range, which is a $15 million decline. Okay, so another 2 cents will pull it back, 10 to $15 million on top of SoFi, making their earnings pre-market. This is the first time I've also seen them split their guidance into a half guidance. As you can see, they did just the second half of 2022, so combined Q3 and Q4. I think a reason why they did this could be because other companies, like Snapchat and other companies that were performing bad for Q2 just cut their guidance whole or were coming out making early announcements. And maybe SoFi just felt that they didn't have to be so precise on their Q3 earnings, to the, last dollar and stuff like that, or, last percentage of EBITDA margin. So they just combined it, and maybe they're just going to have a solid beat on these Q3 numbers, from the analysts. So as you can see, they combined everything, 830 to 835 million, guys. I'm expecting a $400 million quarter could be on the horizon, guys. I know, I like to compare, SoFi to a lot of the tech stocks that are growing really fast, SaaS stocks, but there's a lot of monster companies out there that are doing right around $400 million right now, growing pretty solid. Those are companies like Trade Desk, Palantir, Snowflake. These companies are 3, 4, 5 times more, larger than SoFi. That's massive compared to where we're at. We are sitting at like $5 billion right now, doing the same type of growth, doing the same type of revenue. And I just believe it's a matter of time before, our, projected price target or projected stock price will catch up, because we're being priced as a legacy bank right now. Book value, 3 times sales. It's pretty bad right now. I know there's a lot of, people that make fun of me out there and really want this stock to crash, to $1 or $2. I get it. It'll look good if they fall into the SPAC horizon and become a penny stock like everybody else. But I just think for what they have right now as, equity, book value, that's where we're at right now with 60% growth. I think it's a matter of time before 3 times sales, doesn't last much longer. And we've bounced, over and under $5, I think 25 times, the last month. We're also trading at $5 6 months ago. So I know the $2, $3 range hasn't happened yet. We have clipped into the fours on some nasty days, but I think, these earnings are going to be pretty solid, and they should beat these analyst estimates because they have control, because they're an online digital bank, and they can track these trends that the market direction is headed in. I also have some very good news for you guys. We have Michael J. Burry, guys. This is one of the big bears out there that hates when stocks get overvalued. I have some good news for you. We passed his small qualifications on this post. This morning, there were still 218 primary stock listings in the United States with a market cap over $1 billion and EBITDA less than negative $100 million, guys. So let's start with this right here. Good news is SoFi doesn't have negative EBITDA anymore, guys. They did like 2 years ago. We're talking positive 100 million EBITDA. So as you guys can see, he calls out companies, negative EBITDA, and SoFi is not in that category. So we actually pass these 218 companies. We are over $1 billion. 29 of the 218 had market caps over 10 billion. We are not even in that category of overvalued, guys. We are, 5 billion a market cap. So both of these little statistics, SoFi is not even in any of these statistics that he put out, guys. We could go over to, SoFi's guidance, and you will see just on the back end of the year, they're projecting, $80 million in EBITDA. That's just for 2 quarters. So yes, we're going to be breaking $100 million positive EBITDA even without our most profitable business, which is the student loans, which is, a high profitable lending business that we haven't had for, I don't know, 2, 3 years. That may be coming back in January. So you're going to see EBITDA jump to potentially, $200-300 million next year. I remember the, estimates they put out with student loans coming back, it was like 200 million. So it could be a very, very good year next year if we get that part of our business back. But guys, we're passing some of, Michael J. Berry's bearish, estimates and stuff like that. More good news, SoFi is not into that, crazy, out of this world valuation. And just looking at some other fintechs heading into our earnings, guys, we have, Robinhood right here, just their last quarter, they're doing $318 million with tripled the losses of SoFi, under 100 million. So they're tripled, losses and under revenue. And this is a company trading at doubled the market cap right now. This is, category, kind of fintech, in that range. There are heavyweighted options. We also have a firm, another fintech, revenue right in line with SoFi, but losses are doubled. This is another company trading, 20% higher market cap, right around 6 billion. So both of these companies, have doubled, tripled the losses, higher market cap valuations, guys. So these are things to be thinking about right now heading into our earnings. And I'll just show you guys, some of my expectations of what I'm, going to be seeing for these earnings. We also have members right here, guys, and you can see there's always a significant uptick in, members from Q2 to Q3. You could see Q2 2020 to Q3 2020, there was a massive jump, 118 million to 296 million. Even the following year for 2021, you see 279 Q2 to 377 Q3. So I believe we're going to continue to see that jump, especially with the NFL season. A lot of marketing campaigns going on at the SoFi Stadium. 475, that would be a very solid number to see for Q3, especially going up, So this has been a 2-year continuous Q2 to Q3, growth. I think we're going to see that again for 3 years in a row. I posted this on my Twitter as well, guys. SoFi May was 550. We're trading around 550 today. So 6 months, you've been hovering around the same, type of price. There's over 200-300 other SPAC stocks that have crashed under, a dollar into the penny stock range. SoFi is still holding up. It's still very pathetic of where the stock is at right now, but mega caps have crashed 20 to 60% as well. Members, I see 450. That's going to be an A plus. Revenue 395. That's going to be a 60% growth, I believe. That's an A plus. Losses are going to be declining. Hopefully, I'm estimating 9 cents to 10-cent loss. I give that a B minus, just because we're not where I want to be quite yet. But as long as losses are going down, I believe we're going to be, going into the right direction with the company scaling very aggressively. As soon as the stock-based compensation comes down a little bit, and you add in the student loans, profitability, I believe, that's where you get a profitable fintech growing 50% a year. So these prices right now are very low, 3 times sales, book value, trading right in line with other banks and stuff like that. I just think SoFi has a direction that they want to be in, scaling, acquiring high quality customers. And then, once they get rid of this stock-based compensation and stuff like that, student loans, once again, profitability will be on the way. If you made it to the end of the video, I want to say I really do appreciate it. I enjoyed doing this video for you. We are just a matter of time before we get to our SoFi earnings. Let's hope they're pretty solid. SoFi, once again, did move their earnings up a couple of days, switched them over to pre-market. This could be a solid earnings, okay? I do like where the company is headed. Losses declining back-to-back quarters. Let's see if we can get 3 quarters once again. Be sure to smash the like button. Don't forget to drop a comment. My name's Kyle. Hope you have a great day.